Welcome to the AFC Great Debate. We're live from our special Great Debate studios. You can join in by typing your questions for the debaters into the chat box to the right of your screens. And please vote for the side you think makes the strongest case. They'll be debating a very hot topic. Global trade across the world is being severely impacted by the COVID-19 pandemic. And it's not just a China crisis, it's a chain reaction that's taking its toll on demand and supply chains across the globe. Factories are closing down, millions of jobs are being cut, and supply shortages and bottlenecks are strangling industries globally. As countries and companies reconsider their strong dependence on production from Asia, the perception is that African countries stand to gain as these companies aim to diversify. So the burning question is, can Africa seize this moment of the great global supply chain realignment to fill the gaps created by crisis in China and elsewhere? Or will existing challenges and barriers prevent the continent from seizing this window of opportunity? That's the topic for this debate, and we have two great teams of debaters. One of the teams, the for team, and the against team. So let's meet them. The captain of the team arguing for the motion is also the convener of the AFC Great Debate. He's here in the studio with us, Samaila Zubairo, President and CEO of Africa Finance Corporation. AFC, as it's usually known, is Africa's infrastructure solutions provider. The captain of the team against the motion joins us from his office at Oxford University. He's one of the biggest thinkers on African economies and the author of numerous books, including The Bottom Billion. Welcome, Professor Paul Collier. Vice captain of the team defending the motion is Oliver Andrews. He's the Chief Investment Officer of Africa Finance Corporation. And Oliver's job at AFC is to deliver transformational projects that will position Africa in the next industrial revolution. Joining us from Accra, Ghana, is Vice Captain of the Against team, Mr. Tutu Aguiare. Tutu is the managing partner and founder of Nubuke Investments, an asset management and advisory firm focused solely on Africa. The third debater for the team defending the motion is Jens Thomassen. Jens is a partner at AP Moller Capital. That's an affiliate of AP Moller Holding. They invest in businesses that, quote, have a positive impact on society. And last but certainly not least is the final debater for the team attacking the motion, Carolina Dale Ditlev Simonsen. She is a professor at the Department of Law and Governance at the BI Norwegian Business School in Oslo. So those are the great debaters, and this is the motion they'll be debating. This House believes that legacy trade practices and infrastructure bottlenecks are the biggest impediments for Africa to take advantage of the great global supply chain realignment. Now, I urge you to start voting. You can start voting now for which side you think is winning the argument by clicking on the poll button right here on the Hop-In platform. You decide the winner. Now, this is an Oxford-style debate, so we begin with 2-minute opening remarks, starting with Captain Samaila Zubairo for the team defending the motion. Sir.
Thank you very much for having me, and thank you all for joining this debate. So Africa is home to 30% of the world's minerals. Africa has the largest platinum deposit in the world, about 90%, gold about 40%, copper cobalt about 60%, 12% of the world's petroleum, 8% of the world's natural gas, and I think 10% of the world's renewable water resources. Despite all of this, we are contributing only about 2% to world trade. We have the lowest regional trade in the world because of our infrastructure deficit. And we are really just price takers for most of the minerals and commodities that we have. So we are constantly vulnerable to volatility in the crude oil prices. So what we do at AFC is to try and focus on how we can get countries and societies to focus on value accretive beneficiation of their resources. And we have, I'll give you two examples and give you an example of what we have done in this regard. So if you take cocoa, for example, Cocoa, Africa produces about 70% of the world's cocoa. We are currently contributing or benefiting just about 6% of the value created in a $100 billion value chain. Likewise, Africa, the cashew business, has about $10 billion of value created globally. Africa produces 55% of the cashew, and we're only able to capture about 10% of the value. Now, what we have done is to see how we can work with African states to change that. And we did that in Gabon. We worked with the government and our partners, Olam, through our Arise Industrial Platform, to increase the contribution of timber from at about $350 of export to over $1 billion of export. We've created 8,200 jobs through that, and we created 26,000 jobs, indirect jobs as well. So we think that there's significant opportunity to focus on a creative beneficiation of African resources and create jobs, solve poverty problems, also solve carbon dioxide, greenhouse gas emissions by exporting and re-importing goods to the continent.
Thank you for that opening 2 minutes, a strong opening 2 minutes from Samaila Zubairo, AFC President. Next, we hear the 2-minute opening statement from the captain of the team against the motion, Professor Paul Collier.
Well, thanks very much. First, we don't deny that there's an opportunity from the realignment. There's certainly an opportunity. Nor do we deny that poor infrastructure and legacy trade issues matter. Right? But our team is the team that says but. Partly, I want to suggest that it's breaking into supply chains, global supply chains, is actually quite hard. It's much harder than infrastructure. Essentially, it's a coordination problem. A supply chain is a great cluster of interdependent firms. And so in breaking into it, really quite a lot of firms need to move into the same African country at once. That's a coordination problem. Firms themselves can't do that unless there's one big firm that drags in a lot of suppliers with it. And the agency that's best equipped to coordinate a sort of mass move of a group of interdependent firms into the same place at the same time is the development finance institutions. So, for example, in Norway, it's Norfund. The development finance institutions could catalyze this move. And there's another but, and that is that fixating on breaking into new exports is a very limited way of looking at Africa's opportunities. Africa's got many opportunities for firms beyond just trying to export to the north. In fact, Africa's real problem is not low exports, it's low productivity across all sectors. And that's because it's desperately short of proper firms. Firms, no matter what the sector, bring workers together to work together. That's economies of scale. They get workers to specialize in different things. Specialization and division of labor, the seedbed of productivity change.
Thank you, Paul.
So
Thank you
Africa
for those.
needs new firms in all sectors, and there's a huge opportunity there.
Okay, thank you for those 2 minutes, Paul. Next, it's AFC's Oliver Andrews. 2 minutes to make your opening remarks for the motion.
Thank you very much. My starting point would actually be where Paul stopped, because in 2018, he hosted, if you remember, in Oxford, a conference to look at fragile states. And he made the bold assertion in his paper that, in fact, what you wanted to do for those fragile states was to invite proper firms, as you call them, in fact, with large-scale investments that can create the kind of millions of jobs that were needed. I wholeheartedly bought into that and support it. But then you go on to say this morning that you believe that should be led by the DFI, so that the DFI should do that. But really, inherently, the problem has been that the policies of the DFIs to date, actually, when you look at it, does not actually support that. They support the more micro elements of investments in these areas. And actually, that is the problem. So when I go to a place like Sierra Leone and I say, well, you've got iron ore and we should actually build a smelter or we should do it on scale, the DFIs would rather we do a small scale agriculture for the low, to make sure that we had something that actually goes down to, if you like, the micro. And touch at those bases. So there has to be a fundamental shift if Africa has got to seize upon this opportunity to the large-scale proper investments. And that's what we are trying to do and are promoting, because right now the investments should go to those areas to beneficiate large-scale our raw materials and to beneficiate even our agricultural products to have added value to them. One thing I will also say, it's also, Paul, when you say the global logistics chain, the way it is structured today, the international trade practices largely, and we're not going to change them by policy diktats. It's going to be by a recognition that inherently built into those trade practices, it's a bias against the developing countries. Let me give you an example.
Oh, wait, you can't give them an example. You have to hold that example for the debate because you're out of 2 minutes. I should have warned you also that Oliver is also a pastor, so he also has a distinct advantage in this debate. Now I turn to Tutu Aguiari in Accra. Tutu, you have 2 minutes to start your case against the motion.
And what I would like to say here is that I think that whilst the mention has been made of DFIs, and to pick up on the point just made earlier, I do think that policies are in the process of being changed. I think that one of the areas, and one thing mentioned earlier, was the fact that the policies are biased against the African or developing countries. I mean, I think it's incredibly important for a start that going through these WTO, head of the WTO negotiations, that we have 2 African candidates going forward. I'd love to see the Africans get behind one candidate, because somebody at the helm of trade policy is more likely to be able to reshape things appropriately so that the balance exists. I sit in Ghana at the moment. I spend half my time between here and Accra, and there is a significant amount of effort going on to significantly increase the funding to certain companies in key areas like pharmaceuticals, to be able to beneficiate significantly more of the assets and start to exporting first to the sub-region and elsewhere. In addition to that, we are in the process of developing our bauxite industry. And interestingly, when that went to Parliament, Parliament was very robust about beneficiation. And actually, after a fixed period of time, the only thing they can export is processed product rather than raw product. So I do think that whilst there might be a sense of negativity around the inability of infrastructure and trade to keep us where we are, I think that progressive countries with the right policies are making significant changes. And that then presents an opportunity for international companies to come down into places like this and start to do their manufacturing here. If you look at the current environment that we're in, Africa, and still boggles my mind that nobody seems to quite realize that Africa, regardless of all the doom and gloom, has come out of this particular crisis incredibly well. So if I was rethinking my global supply chain, I'd be thinking about putting more factories in Africa, because it's a much better place and a much safer place and a much healthier place to produce. Thank you.
Thank you. Thank you. Wonderful opening salvos there. Now let's hear from Jens Thomassen for the opposing team. Jens, you also have 2 minutes to defend the motion.
Thank you. I thought I'd pick up on some of the points that were made earlier on. So Samaila's example of cocoa is quite pertinent, and I think the same principle applies to raw cotton and cashews. And if you just sort of double click on the cocoa industry, as Samaila mentioned, Ghana, Ivory Coast produce about 70% of the world's cocoa production, but it doesn't get beneficiated. And I think you then sort of look at the chocolate industry. I mean, Belgian chocolate is an oxymoron. The last time I checked, the cocoa harvest in Antwerp was fairly abysmal, but Ivory Coast, Ghana is forced to export its cocoa beans because they don't attract an EU tariff. Whereas if you import beneficiated cocoa products, that attracts an up to an 18% import tariff from the European Union, which allegedly is trying to support growth in Africa. So I think there is a lot of work to be done to facilitate export of beneficiated products. On the infrastructure side, there is a lot of work to be done. My former colleagues, when they were at Maersk, built a $1.2 billion deep sea container port in Tema, just outside of Accra, which I believe is the largest deep sea port in West Africa. However, one of the projects we're trying to work on ourselves is to improve and upgrade the connecting road that takes that port into the highway. And that is a road full of potholes and it's in dire need of work. So I think thinking very much of what I think AFC is trying to work, think about economic ecosystems, interdependencies, where we can start to create economically reliable counterparties, because we don't have government balance sheets we can draw upon. Governments in Africa are raising debt at 8, 9, 10, 12%, when OECD countries are getting paid money to put to take money off other people's hands. So I think that disalignment there is perpetuating the challenges of building infrastructure and also impeding perhaps some of these difficult trade conversations, where we are going to put jobs at risk in Europe if we want to liberalize trade and allow Africa to compete on a level playing field.
Thanks, Jens. Let's now go to the final opening statement from Professor Ditlev Simonsen. Carolina, 2 minutes, please.
Well, thank you. This gentleman has said almost everything, so I in this field, so maybe I should back and relax. No, I'm gonna talk from or address a different perspective. The motion is about increasing Africa's way of increasing production and export. But has everybody agreed that that is actually the goal? What happened to the sustainability goals, the SDGs? Adopted by 193 countries, yet we are not addressing those at all. Can we assume that everybody wants to live like people in the developed world? Spending most of the time working in office or commuting in a traffic jam? Not sure about that. If everybody consumed as much as an average Norwegian, we would need 5 planets. Will African or people in general become more happier with increased production and consumption? No, because in Norway, for example, consumption has quadrupled since 1980. However, people's level of happiness has been pretty constant. And many Norwegians miss the closeness of family and friends, and I see that that's really important and works very well in Tanzania when I work there. So we can learn a lot from Africa in that sense. Still, Africa has malnutrition and hunger, and we have to get rid of that. And the developed world also needs to get rid of obesity and excessive consumption.
Fantastic. You've heard the opening salvos, and let's go now to open warfare, the debate segment. This is a chance for each side to strengthen their case and weaken the oppositions. Let's start with AFC's President Samaila Zubairo, who is for the motion. Samaila, you heard some interesting, I've got the poll results, by the way. I'm going to tell you that in a minute. They're coming in.
So I mean, lots of points to follow up from especially from Professor Paul and from Caroline, Jens, and Tutu. So very quickly, he talked about having the firms. So at the special economic zone we built in Gabon, there are 70 firms that are operating in that place, and they're from all over the world. And they're there because of the ecosystem that we've created there. It's possible to do many things. So, for example, before, if you were just going to produce tables, you needed the wood in blocks, and you couldn't do anything with the cutouts and the waste. But the waste could be used to create knives. They could be used to create coasters. They could be used to create several other things. At that same economic zone and industrial park, you have people that make glue, people that make that you need to put the sawwood together. So Gabon has actually grown to be the second largest exporter of veneer in the world presently. They're, I think, the 8th largest exporter of plywood. So this is practical example. This is not just a theoretical thing. And right now we're actually thinking about having showrooms, in London here, in Shanghai, in San Francisco, in Osaka, and whereby we put on display the furniture that is made out of this special economic zone. We have actually pivoted from there. We're looking at projects in Benin and Togo, where we're going to focus on cashew and cotton. And we're going to try and also increase the value capture from Africa in these products. And we think this will solve some of Africa's key challenges. So one of the biggest problems we have is jobs. We have 1.2 billion people. Over 60% are under 25 years old and they have no jobs. I think we have about 37% unemployment on the continent. So these projects, these investments would actually create those jobs. So we think that now is the time for Africa to focus on industrialization, import substitution. And then, of course, it can't all be about export. So we can consume the things here. So nothing stops us from eating our cashew, nothing stops us from eating our chocolates, nothing stops us from drinking our cocoa drinks. We can consume here, and we can create the base for the continental free trade agreement that is coming on stream. So with this production, we would feed that market.
And your passion and conviction seems to be permeating into the pollsters, because I'm looking as the poll is going, and currently you're leading 75% for the motion and 25% against the motion. I'm going to go to the captain against the motion for your right to reply, Paul Collier. You have the floor.
Thanks very much. Well, let's move that 25% up. So the continental free trade area does matter. That's important because Africa is present trade policies reduce the size of domestic markets to much too small a level. So we need something that's closer to Pan-African. So that's very important. But think what opportunities that would open up, which are basically not necessarily export increasing to the north, but their production increasing in Africa. So food, at the moment, not only does Africa import a lot of food, it has something like 40% losses between harvest and mouth, and that's because there's just not enough food processing in Africa. Agro-processing of food means that it lasts longer. And so that's a huge opportunity. Half of all expenditure in most households is on food. So huge opportunity to process it. That would actually reduce imports. And so it's trade reducing, but it's living standard increasing. The same, housing. Africans are very badly housed at the moment. There's a huge opportunity for job generation by constructing low-cost, affordable housing. That doesn't increase international trade, but it massively increases living standards. So these are the sort of opportunities we need in Africa, and that's what firms know how to do. They know how to organize food processing. They know how to organize affordable housing construction. So these are the opportunities as well as fixating on exports.
Well, you'll be pleased to know that in the studio here, I saw your opposition nodding in agreement. So I think maybe you have moved that down. Oliver Andrews, what were you thinking?
Well, I was nodding in agreement because yet again, I agree with Paul. I agree with him. And for me, the two things you said, because it all ties up to what I call import substitution. Africa still is importing far too much food when in fact they can grow the food. What is lacking is the processing. But there are two reasons why that I think is happening. We can't attract those firms to do that. First is the lack of infrastructure, and central to all of that is power. We have still not got it right. And I'll come to the power in a bit. The other thing I must say is policy issues in terms of government making it ease of doing business for these firms. We cannot leave here without actually saying also that governments in Africa must continue to look at the environment in which businesses operate and help them facilitate that. That is critical. And you hear this mantra about how they support the private sector and private sector being the engine of growth. Every African civil servant knows that, but the fact of the matter is it's not practiced. We have to be honest about it. Having said that, I also think, and there's one point I was going to come back to. The world trade as we do it today is disadvantageous. And Paul, I'm not sure whether you or any of your students have done something looked into what is called the incidence of transportation costs. Because if you look at it in terms of world trade, you will see that because Africa exports primary products all the time, we actually pay for the cost of that transport because it's largely FOB. And yet when we import our ambulances, our other critical aspects is on a CIF basis. So in effect, when you look at Africa today, we are supporting and not just Africa. It was
Global
for
trade.
countries that actually were supporting world trade because we're paying both for the exports and imports of trade. If we had a fairer trade system, that would go away. Imagine the savings for African countries.
There's some questions coming in for the debaters now, thick and fast, and the post is really coming alive. I want to read this question here, and maybe Carolina, you may want to wade in. It says, across the world, climate change has been consistently ranked as the biggest threat to national security in several countries. Despite having the lowest emissions of carbon dioxide, Africa is the continent that's most susceptible to the impacts of climate change. By trying to attain climate goals, will Africa miss out on expanding trade to fill this so-called supply gaps? That's the question. Want to tackle that, Carolina?
Yeah, of course. Increased production will definitely increase the emissions, and like you say, it's more impact in Africa. But that has to do with consumption in the rest of the world as well. But I think one of the main problems is that the production in Africa is poor. It's less expensive for African countries to import goods that they can produce themselves: sugar, coffee, cashew nuts, as mentioned here. And I'm also worried that we're talking about supply chain shift from China to Africa, but what will happen to a large extent is that Chinese companies buy up African companies, and so it's like Chinese companies exploiting Africa's resources anyway, even though it's coming from Africa. So there's definitely a need for business education in Africa, and I think that that's what we're working on.
Okay, I'm going to go now to Tutu Aguiari. Thanks, Carolina. Let's move to Tutu Aguiari, please, to strengthen your case. I'll give you a couple of minutes.
Yes, I mean, I actually do believe that the realignment of the supply chain presents quite a lot of opportunities for Africa. I mean, most of our policies are aligned to doing one thing and one thing only, which is bringing foreign investors in and foreign capital in to either just come and take the raw resources or to potentially beneficiate. You know, I've seen a number of people who complain all the time because they chair local companies. And when they compete in the same space with foreign companies, there are all these benefits that accrue to the foreigners, which means that they can never make the same amount of money. So policy changes and the realignment of policies, I think, are incredibly important. And the other thing, the other great travesty which exists, which I know is being worked on at the moment with a number of African institutions, is just the cost of capital. The cost of capital is nowhere near reflective of the risk. You know, 3, 4, 5 years ago, Argentina goes out and borrows, borrows money for 100 years at 6.75%, and then proceeds to go bust again for the 6th time in 30 years. And yet you won't get an African non-Francophone country able to do the same thing. Greece, which we all know nearly went bust a few years ago, is borrowing money at close to 0%. So there's this economic arbitrage that exists where, an extraordinary amount of pressure is put on, or extraordinary amount of cost is put on significantly lower risk African in investments. And that actually deters from this. But I know that there is a lot of work afoot pointing this out in the international community so that this can change, because I do believe that the realignment of the global supply chain, which means that if our real focus is actually on funding or supplying the needs of the other African countries, processing food to sell, in the continent, shorter supply chains, and refusing to allow raw materials. I mean, if I had my way, I wouldn't allow any raw cocoa to be exported out of Ghana and Ivory Coast. If you want our cocoa, come and process it here. Those are the sort of things which I think very soon will start to happen. My final point on climate change is that I still struggle with, Africa having a 2% of being 2% of the global population, and yet being asked to take the same pain as the rest of the world who polluted the world. And there doesn't seem to be an appropriate balance. Two of the largest countries in the world contribute half of global warming, and yet we're being asked to carry the same burden as anybody else, and that just seems unfair. And hopefully, with the right person in place in some of these trade organizations, we'll start to see a significant change in addressing the balance around how this pain should be taken.
Yeah, you make a lot of great points, but let me just touch on that one about the cost of capital. I have the advantage of engaging the likes of the Zubairos of the world and the Professor Benedict Orama of Afrexim Bank regularly, and it's a chorus.
Yes.
It's a chorus that all of you guys are in harmony about the cost of capital and the unfair advantages others have. I know you want to get in on that, please, Sumaila.
It's his favorite topic.
It's his favorite topic.
I mean, I just couldn't agree more with Tutu. The evidence doesn't support the risk perception of the continent. Earlier this morning, I was discussing on a panel. I was saying to them that the default rate risk for Africa is lower than Eastern Europe, Oceania, North America, Latin America, and Asia. Yet, we don't see that in the pricing of African instruments.
Why?
Two reasons. I think just the lack of knowledge, about the real risks on the continent.
A disconnect, really.
Yes,
yeah.
And also the lack of allocation. The allocation for Africa is almost negligible. And so you can't go beyond a certain pool. So most investors would have allocation for investment grade, and then if you're investment grade, you fall into that. And then they have allocation for frontier markets, and then all the African countries will fall into that frontier market. And there you have all the other countries where people have been able to better market themselves and better connect with the investment community, so they have better deals.
So I hear that you're saying African investment opportunities or Africa is not very good at clearly marketing itself.
Yes, we have not changed our narrative.
Yeah, it's poor.
The narrative on Africa is war and famine. We need to change that narrative.
Yeah, urgently.
We have to.
Especially if there's an opportunity to take advantage of changes that are happening now.
Exactly. Yeah. Which is why for us, we can't overemphasize the need to move up the value chain. It's not enough to continue to export raw cocoa, raw cashew, raw manganese. Just to give you an example and relate it to climate. So you produce manganese from Africa, you export it 3,000 miles to China, and you put it on rail for another 400 miles to a factory for processing. That voyage has greenhouse gas emissions and carbon dioxide emission. When it gets to China, it's going to be processed in a coal-fired plant. And then it will be exported back as alloys or aluminiums into Africa. So think of all the greenhouse gas emissions in that voyage. If you produce or process that manganese in Africa, you create at least 400 jobs, at least, for a small plant. You would use renewable energy from hydro, wind, or solar to do that processing. Then if you have to export the processing, you have far less voyages than you would if you're exporting the raw commodity. So it makes sense for us to change the way we trade with the world, and now is the time to do so. I also don't agree that Africa, should do nothing, and because Norway has increased consumption and they're not happy. Let us at least have the jobs, and be unhappy than not have the jobs and wallow in poverty. You also need to understand that because you don't have jobs in Africa, people are constantly seeking opportunities to travel to Europe and the rest of the world, where they cause a migration crisis.
Yes.
So it makes sense for us to look at how do we keep Africans in Africa, create jobs in Africa. I think it's important that we do that.
And now you're talking about disconnect, but one of the connections is with Jens and AP Moller. He's not only your third member of your debating team, you also have a very strong business relationship. So perception or his perception is very positive. So I'm going to go to Jens now to respond to some of the things that you've heard and maybe buttress your case, Jens.
Yeah, we can go on for a long time. There's a lot of good stuff to talk about here. But I think if I can sort of try to bring a constructive example to illustrate some of the challenges. So being Norwegian and working in Africa for the last 10 years, obviously brings memories back to the Norwegian aluminium industry, which was basically premised upon cheap access to power. And I mean, this was a material source of wealth generation for Norway before we had oil. And Norway pre-oil was not a rich country. But that bauxite was basically probably dug up in Mozambique or in Africa, put on an HFO producing ship, hopefully it was not coal, and shipped up to the fjords of Norway where it ran through a smelter and then being shipped back to Germany. Again, it's the same example that Samala made earlier on. If we were to sort of think, how can we do this in Africa in a positive way? I mean, Mozambique has bauxite, Mozambique has Cahora Bassa. Now, cost of capital is expensive in Africa, and we have a job to do as all investors to convey the good stories. I think the default rates of African project finance deals are about 3% at least 2 years ago. US power is 3 times that rate. So I think the perception belies realities to Samala's point. But renewable energy has come to Africa in a big way. And I think the programs in South Africa, Morocco, and Egypt has been a tremendous success, delivering very cost-effective power. And the immediate response you get from the old utility school is, well, it's intermittent power. Yes, but it can be blended in very well with hydropower, which is developed to some extent in Africa. And if we can utilize the Cahora Bassas or the hydro projects that are now in development in Gabon or in Ghana to work in tandem with very cost-effective wind and solar projects, then we can bring that low cost of power, which can make manufacturing industry competitive, particularly when it is energy-intensive industry. The manganese that Samala mentioned in Gabon, and we're a partner together with Olam and AFC in the port infrastructure there. This is the most lowest cost manganese you can find in the world, but it's being put on a rail, put on a ship, and sailed around to the other part of the world because that's where they have the smelting plants. And I think that is a tremendous opportunity can be dealt with. And again, dealing with the concern around off-taker credits, because we're working with industrials, commercial players like you do in other countries, we don't rely on government credit support, which is another bottleneck we're facing with.
Okay, Jens, I want to now go back to the questions, and one of the questions that came for Professor Paul Collier. Paul, it says, manufacturing and industrial development will be central to Africa's ability to meet its development goals. Many African countries, especially resource-rich states, suffer the resource curse and are stuck in a perpetual cycle of exporting unbeneficiated commodities. Do you think, Paul Collier, that this model is sustainable for Africa's growth as we build back better from COVID-19?
Okay, so 2 things. One is the resource curse doesn't have to be a curse at all. It can be a resource opportunity. But the key thing there is using the revenue, first capturing the revenues, which is a lot about tax, and secondly, saving those revenues and investing them in a range of things, including infrastructure. Right? And some countries have done that, Botswana, and some haven't. So Botswana used to be about the poorest country in Africa, landlocked, semi-arid. It's now about the richest, and it got rich by natural resources, by diamonds. But it saved the diamonds, saved and invested. It behaved prudently. A lot of other countries behave very foolishly, short-sightedly. So partly, it's not natural resources that are a problem, it's the policies around them. I wanted to also, jobs in an economy, Africa desperately needs jobs, right? Only a tiny proportion of those will come from manufacturing. Just look at any economy, right? Manufacturing is a small percentage of the jobs that people do. Most jobs nowadays are in the service sector or in construction or agriculture. And so we've got to think more broadly than just obsessing about manufacturing. Manufacturing matters, but we can do so much more, including we can do energy. So let me just close with a few remarks about energy. Ethiopia has created a lot of very cheap energy from hydro, and it goes back to the problem of risk there, because in order to finance that, since the NGOs blocked the aid agencies from financing dams for their own crazy reasons, Ethiopia had to go to China, and China had opaque and very expensive terms for the money that it lent. So we desperately need the European and American capital to provide competition for that very, very unreasonable Chinese money. And secondly, also on energy, solar. Solar presents big opportunities now that are, they're very well suited for Africa. Mini grids based on solar are much less precarious than the big power station.
Okay, Professor, I'm gonna have to cut you off there because we have to stay to time, and we're close to finding out who has won the AFC Great Debate. Some powerful arguments here. Now, each of you has one last chance to make your case. You have 1 minute for your closing arguments. I will again start with Team Captain Samaila.
So thank you. For us at AFC, we were built to provide pragmatic solutions to Africa's infrastructure and industrialization challenges. And we continue to find opportunities to do that. We have identified our successful case studies. We also have a pipeline of industries and projects that we would invest in to grow this initiative. So just touching on the last point made by Professor Paul, so you need manufacturing to create the services. The services don't exist in a vacuum. You need to create cornerstones, industries, activities and initiatives, and the services will be built around them. So you need to have an anchor. And for us, job creation around beneficiation of our natural resources, processing of our commodities will provide that anchor for the industrialization and all the service industries and several other things that can happen. So for example, if you can show that you've de-risked a sector, you will be able to get several people that come into that ecosystem of that sector.
Okay, I'm now going to the team captain for the team against the motion, Paul Collier. 1 minute.
Thanks. So breaking into manufacturing is hard, and it doesn't actually generate an awful lot of jobs. It's worth doing, building these clusters, but it's not the make or break solution. India has created millions upon millions of jobs, but it's not really broken into manufacturing significantly. What India's done is services. And these things don't have to be exported. Just focus more on the sub-regional economies within Africa, those markets. If we could join up those markets so that the domestic markets in Africa were not so tiny, single national markets, but with sub-regional markets, huge opportunities for firms of all types, both domestic firms and foreign. And actually, there isn't a trade-off between them. It turns out domestic firms and foreign firms usually complement each other.
Oliver Andrews, right to reply, 1 minute.
Thank you. I am trying to bring this together now in terms of this post-COVID world that we're going to live in for Africa. And I want to touch upon something that Caroline said about it, because we're not mentioned too much the environment. One thing we know we will never do as a world again, I hope, if we the kind of species I think human beings are, we should learn from this experience and make sure we give Mother Earth more respect in the environment we live in. Now, to do that, I actually say our trade patterns and policies, it needs to change in a manner that we've talked about today, realign our logistics chain so that I can take iron ore from West Africa and bring to the Port Talbot steel plant that I know is in dire need of it, rather than it being sent to China first before it comes to Port Talbot. And so we cut carbon. I also I must go again to this happiness issue. Honestly, if you look at the misery, I only have to leave 5 kilometers. In fact, sometimes I don't even have to leave a metropolis in Africa. And you see the misery of how Africans live.
Yes.
The priority is jobs. We must offer them jobs. Now, be it jobs in manufacturing, Paul has said, Samaila has said, Paul is saying it's not too much. I actually look at all of those, particularly what I call the sunrise industries. We need to look at that and how Africa can gain from that. What do I mean by that? Data, for example, Paul. And what can we do to have more data centers, to actually have, you talk about jobs in India. Call centers are a big one if you go down that road as well.
Okay, Tutu Agyari will now try to sway you into voting against the motion with his 1 minute closing argument.
Hi. For me, I think that this realignment of the supply chain is presenting quite a large opportunity. I think that in order to take advantage of this, certain things are happening. I think that addressing the issues around cost of capital is something that the African-focused institutions need to come together, provide solutions on. And I know that my finance minister and the ECA and others are working very closely to hopefully arrive at solutions on that. And then secondly, the realignment of this global supply chain. I think that the opportunities that exist and the low-hanging fruit exists with servicing ourselves. The US economy is 80% domestic. Africa's 16% domestic. And I actually do believe that our realignment, our focus should not be on trying to realign ourselves to serve the rest of the world better. The realignment should be much more should be much more on serving ourselves better, providing, Ghana being the food basket for Nigeria, Nigeria being the manufacturing basket for West Africa. And that I think is the opportunity which is entirely within our control except for capital. But more importantly, it's something that we can do, and hopefully we can bring Norwegian companies and Northern European countries along for the ride, but it's our ride, not theirs. Thank you.
Okay, Jens, you're up next. Your final thought in 1 minute, Jens.
Yes, I think I'd like to go back to sort of the ecosystem concept here, and there is an entire need for infrastructure and improvements on free trade across Africa, between Africa and other continents. And I think Caroline makes a really great point that if you take the bigger picture here when it comes to Mother Earth, whether that is climate change, SDGs, people coming out of poverty, Africa's population is looking to double over the next 30 years. There's nothing that we can do to change that. That is a population that needs to be fed, and whether that is jobs in manufacturing or call centers, it doesn't matter. But we need to create a meaningful and sustainable level of wealth for that population. And I think that comes down to debottlenecking infrastructure. Infrastructure is not coming at a transformational pace. We are just patching up things as we go. We're building one new power plant here and there every year, but it is not really sort of fixing the bigger issue. And I think in order to do that, I think we got to deal with what we can solve, and that is these ecosystems, which I very much subscribe to, where we have a universe, we have a cluster of companies and governments that can work together and make something happen. And maybe we get a cascade effect out of that. But thank you very much for hosting me.
Now, Carolina, you have the honor of the last word.
Well, I totally agree with Somalia. Work for all is crucial. But my point is that Africa cannot develop in the same way as Europe, America, because that has failed. What Africa has to do is to kind of leapfrog what we've done and focus on, for instance, like somebody like Oliver mentioned, solar energy, alternative energy, and I think that can be that can help to give people work and to make business locally. So who failed was Europe and America, and I think that Africa can at least be much more sustainable than we are and still have jobs.
Tusen tak, Carolina. So you've heard the two sides. The votes have been coming in, and we have a winner. Let's find out who has won the AFC Great Debate. And gentlemen, the winner of the AFC Great Debate, and remember the motion was, this House believes infrastructure bottlenecks are the biggest barrier for Africa to take advantage of the great global supply chain realignment. We have a winner, and the winner is for the motion. For the motion. Congratulations. For the motion wins. Team Captain Samaila, you have the last word.
Thank you very much. Again, we're very pleased with the outcome of this because we believe it fits into our purpose. Our purpose is to provide pragmatic solutions to Africa's growing infrastructure deficit and challenging operating environment by developing and financing infrastructure, natural resource, and industrial assets that enhance the productivity and economic growth of African states. And we have done that. We have case studies that we've proved that this can be done. We have a good track record of de-risking opportunities and deploying capital on the continent. We have deployed up to $8 billion since our creation, and we can do so much more. We are very keen to see how we can reduce the cost of capital on the continent, and we're having those conversations, and we hope that we can get some help from NABA and the Norwegian Ministry for Foreign Affairs. We can talk
It's a partnership.
Yeah,
it's
a
collaboration.
Partnership. Yes, and we're happy to continue to partner with the Nordic region to see how we can change and confront the reality of risk as opposed to the perception of risk on the continent.
Beautiful, and I'm happy that you guys came with your A game. Thank you very much for some great debaters. I know that I enjoyed it. I hope that you enjoyed it too. That was the AFC Great Debate. Now back to the main program. Thank you. Goodbye.